Welcome back, everybody, to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano, and today we are looking at the return of some potential dynamism to our price action going into our final options expiry of June, and coming out of this June options expiry, I should say this June OPEX period, which some are saying was the greatest, the largest options expiry in history up to this point. So that's coming up today, thinking about what we can expect in terms of our price action this week. Before we do, we are going to head over to our gratitude. Today's gratitude goes out to Just Another Karen, aka Karen Van Blarkum, who is anything but just another Karen. Many thanks for sponsoring today's video breakdown and newsletter, as well as to our monthly supporters, Not Medical Advice, Masta, Kurt Lutzko, Cosmotropic, Despike52, and Hey Luckies, aka Faithless Looter, for helping offset some of my data expenses on a regular basis. Many thanks to everyone who has supported the channel in the past. Thanks to everybody for dropping by the live stream once again on Friday. We had a really excellent time, breaking down some of, especially this past week, taking a look at some of the trading strategies, especially that I put into practice, trading exclusively GameStop over the past year. That is post Roaring Kitty return to X and to Reddit, and how I was able to essentially double my GameStop share position using only very conservative covered option strategies. So if you're interested in that, if you didn't have a chance to check out the live stream, do go ahead and check out the recording. Highly recommend it. I have it linked down in the comment below if that's something of interest to you. We're always happy to see you every Friday at 4 p.m. Eastern time after market close. So let's get into our data for today. A bit of a contextual overview here, right? So what are we thinking about coming out of June? So June OPEX is one of those big OPEX periods. It is not only an OPEX, right? We have monthly OPEXs. We have quarterly OPEXs, which are often very big, especially as pertains to quarterly rebalancing. But June is also a leap state. So June OPEX tends to be one of the bigger OPEXs of the year. SpotGamma, of course, came out with their publication this weekend, their newsletter, talking about how, based in terms of open interest across equities, June OPEX was essentially the largest options OPEX, options expiry ever, in terms of the number of contracts and the value of those contracts that were open into that expiry. So what does that mean in terms of price action? Well, in terms of the broader market, usually coming out of something like this tends to be a return of a little bit of dynamism as we are unpinned from a very tight hedging environment. So right as options positions tend to pile up, right as we get closer to OPEX, right, the total gamma of that options environment tends to squeeze down as it becomes less and less likely that there will be contracts that are further out of the money, that they will expire in the money. So accordingly, right, so those end up de-hedged and by market makers. And at the same time, right, options traders, institutions, they end up compounding, right? They pile more and more options positions closer and closer and closer to the money. So we saw something like this, for example, in GameStop just last week, right? We can see we had substantial, right? There are over 600,000 options contracts open on GameStop. This is a massive number of contracts. And yet our price action on Friday in GameStop, kind of boring, all told, right? Really not too much happening. But we can see in terms of, when we take a look at gamma exposure, so this is one of the derivatives that is a mathematical derivative that options market makers use in order to dynamically hedge their exposure to those options contracts and maintain optimal profitability as options dealers. So as we can see, right, despite the fact that, we had a lot of contracts up at 40 or a lot of contracts up at 35, very concentrations of gamma really around this $23 to $25 price point. So very kind of tight pinning in there. Really, we didn't even get past the 24 mark. On Friday, had a max pain finish, right, a couple cents just below max pain. So we can see something like that larger, more broadly happening in the markets. There are still quite a lot of call options for the broader market based in the 590 position over in SPY SPX. That's 5900/590 based on the JP Morgan collar trade. So the last time we had to deal with this was back actually coming out of March OPEX. So coming out of March OPEX, we had about a 10-day period. Some bullishness, right? So March OPEX was very bearish. So we had a lot of put options expire. And then accordingly, we had a very strong rebound back to the upside as all of those puts came off the board. Into the 31st, then we kind of went back down into the 31st. So that's over here, right? That's right here. So that's this recovery. So we have March OPEX was right here, and then we recovered up into basically the JP Morgan kind of color just a few days before. So this is like the 27th. This is actually when GameStop published earnings, and then the convertible bond trade was back here, and then traded down Friday, Monday into, so this would be Thursday, Friday, and then this is Monday. So this is the JP Morgan collar trade here, I think. Yeah, right. No, I think this one might be something like that. In here somewhere. In any case, right? So we're looking at this again, but basically what this says is probably a bit of stability. We do have support at that 590 position. So if we do get some geopolitical disruptions, right, maybe that has some implications that will stretch over to GameStop. Though I will say, right, what's something we've been talking about over the past few months as well has been whether the broader market has been useful as a gauge for trying to estimate contextual price action in GameStop, right? Historically, we've looked at GameStop really being affected by, say, bearish downturns in the market. So when we see bearishness in the broader market, typically that's meant some deep bearishness for GameStop as well. Not really. We haven't really been seeing that, since then. I mean, that is likely to, right, as well, to some of these other factors, things like, doing the convertible bond offering is a GameStop specific event, doesn't really have much to do with whatever's going on in broader equities markets. But what is really interesting is how closely we have been tracking Bitcoin. So, for example, I have the 1 minute charts here for pre-market heading into today's trading available for you to take a look at, right? And you can see that basically GameStop is overnight and in the pre-market period just tracking Bitcoin, right? I mean, we're just doing exactly the same. We're moving as Bitcoin is moving. Bitcoin goes down, GameStop goes down, pops back up, GameStop pops back up, right? So we get this little stutter here, and then we climb back up. We get this peak, we come back down, go sideways a little bit, sideways slightly down, and then whoop, there we go. Come back up, do a peak, kind of slide back down a little bit, right? So very interesting to see GameStop really tracking Bitcoin there. What I would say is likely on the table, we have a couple things coming up this week. I mean, nothing I think terribly exciting, but right, usually as we come out of OPEX, right, if we're talking about the broader market, sure, we do have to worry about the JP Morgan collar trade. I mean, worry that is a support, right? That's going to keep us kind of pinned in this 590 to 600 SPY level. So up here, right, you can see we have this overhead call position, and down here. Right. So I guess it's over in SPX. So that's kind of what's waiting that there. It would look like this would be a super high volatility position. So that's that should keep us supported in here. If somehow things do fall through, I mean, volatility will spike up, but not going to go too far down. So we do have something of a high confidence kind of trading area here. We don't have that necessarily representing the same structure over in GameStop. So as we saw last week, this was heading into Friday, what our GEX looked like specifically for 627. Right, we can see that things freed up a bit, not as tightly centered around this kind of 23-25 area. If we actually go take a look at that down here in our gamma landscape, right? So we can see. We have net call GEX basically from 23 up to 25, right? Kind of goes up, and then it sputters out after 25. So this is across all of our expiries. If we take a look specifically at this week, we can see that up close, right, 27 is kind of what's forming that sort of overhead there. But we do have, we do have some at 25.50. We do have some at 26. So if we were to move up, if we were to get something like ETF settlement, if we were to get something like ETF reweighting that could affect this, right? So we're still dealing, right? We're in this creation window, this delayed settlement window related to a very high number of fails related to XRT that likely involve GameStop back on the 30th of April and the 1st of May. This is when XRT shares outstanding went to an historic low. So never before in the history of the fund have shares actually been lower than they were as published to be on the 1st of May of this past year. That's 1.75 million shares outstanding. So this created quite a lot of FTDs. Actually, if we bop on over to XRT, we can take a look at that. Is this XRT? Yeah, this is XRT. So we'll take a look at fails here. If we bump back, yeah, we can see, right? So here on the 30th, 1.2 million fails. So 348,000 fails were logged on the 29th, and then an additional, don't know how many of these were actually potentially closed, but 855,000 new fails were logged on the 30th, and then all of a sudden, somehow, without this really disrupting anything to do with the fund, right? Just all of a sudden, 1.125 million of those fails just disappeared. So it'll be very interesting to see, right? So we have according to the Brno paper, the Mendel University Brno paper, right? So we have a T+6 period for that fail to be logged. When that T+6 window has passed, then retroactively on T, the fail is recorded. And then there is a 35-day calendar day period followed by a T+1 in order to put in a creation order in order to clear those ETF fails. Creation orders by DTCC rules can take place over a 4-day period. So not too certain whether that T+1 is inclusive in the T+4 or if it's T+1 and then T+4. Not exactly certain, but we do find ourselves in the early part of this week, right in the midst of that 4-day window. So because we had Thursday, last week was a market holiday, we do have an extension of that window into this week. Now, what I will say, right, is we were thinking about there being some potential large clearing of fails that could have taken place basically the week prior to GameStop earnings. We did see some of this, but potentially not as large of a magnitude as we would have otherwise expected based on the number of fails that were showing up. It is possible, right, that some of these fails for that week were cleared earlier in the lead up to the Bitcoin announcement. It is possible, right, we've seen lots and lots of activity, huge spike in the outstanding, huge numbers of fails relative to the outstanding over on this new GameStop 2x leverage fund, leverage ETF, that is GMEU. GMEU is now a new piece of the puzzle that does seem to be an extra valve, an extra, something of an extra cover to kind of shove dirty dishes in so that when the guests arrive to take a look and see whether the house is in order, the dishes aren't clean, but if they don't see them, then it's not a problem right now, something like that. So good to keep that in mind, right? As I mentioned this, it's not, right, this is not an exhortation to go ahead and try to trade on that information, but just if we do see this type of dynamism kind of come onto the tape, I wouldn't be surprised, number one, to see a little bit of that this week, especially earlier in the week. That may take us kind of up and out of that 23 to 25 bracket, maybe into this kind of 25 to 27 range that we sort of saw mapped out there on our gamma data. Right, so let's see. Yeah, here we go. Right, so this is for this week. Right, so if we do see some of that type of activity, there is a chance that we start to see some of this. If it wasn't cleared earlier, I suppose they could have cleared it earlier, but we did start to see some XRT creation last week. So Thursday, we got a pretty big order, take us up to 5.45 million shares, up from 2 million. So it got very, very low again. Right. So, but as we head into as of June 20th, the outstanding had come down to 5 million. So there was more redemption actually on Friday, not net creation. Again, curious. So, whether we'll just have to see whether this ends up having an effect, right? I wish I had more ability to say, yes, this is going to have this effect, or no, it's not. But if we do see some of that kind of dynamism, I wouldn't be surprised. I would more or less be inclined to suspect that it is related to some of this ETF settlement, a sort of lag in this, in maybe some of this creation that we saw take place toward the end of last week. Options wise, we could start to see some additional options activity, right? Our IV is very low. As we talked about on the stream on Friday, GME IV now is basically down to its second. On Friday, it got down to its second lowest value in the past 52 weeks. So the lowest value IV composite was 68%. So that's a composite. I think that's all of the basically. I think how Schwab goes ahead and calculates its IV composite value in the involatility study, if you use Thinkorswim, is by a combination of the value. It's an average of all of the total options expiries, and then that's somehow it's weighted. It's weighted based on, I think, the different weeks. I'm not sure of what the weighting. Maybe it's all equal, but it's a value. It's a notional value, and you can use that to estimate within reason, sort of in general, what the volatility premium and options contracts generally are. So options premiums are very low right now. The second lowest we've seen in the past year. So right before, October 25th, when Ryan Cohen tweeted YOLO and then deleted it, and this is several days before National Cat Day, which was on October 29th, when Brian Kitty filed his Chewy 13G. 13G is when he filed his 13G, that he had sold his Chewy position, and then thereafter began our very large move to the upside, basically for the next 2-ish months, 2.5 months. We're very close to that. So we're within less than 10% of that value. So we're within about 6 or 7% of IV lows from that point. So very interesting. Basically, what that says to me is we are getting close to a point in IV pricing where it's becoming unpalatable to continue to sell volatility, right? If volatility is very low, if we're seeing those types of low measures, then institutions are going, well, there isn't much volatility left to sell. And so under these conditions, if there is volatility that's kind of packed away or internalized via this kind of ETF musical chairs operation, it may be an appropriate time to let some of that volatility onto the lit market in order to make volatility something that is once again palatable to sell. So more or less my expectations heading into this week are we start to see some form of dynamism, right? We start to see a little bit of that type of recovery, especially if Ryan Cohen and or other insiders such as Larry Cheng do go ahead and file Form 4s, let us know whether they've expanded their positions. That potentially could have exacerbated some of the volatility conditions going back into early April. This week could see some decent recovery up into that $25 to $27 area. I would not expect extension past the $27 area. I would not expect a weekly finish above $27. I'm not sure I would expect a weekly finish necessarily above $25. I think we'd probably need to see something else kind of come onto the tape. But this is a good week, I think, to see that happen based on, number one, right, the option structure. Number two, despite geopolitical fears, as long as, well, even if there's geopolitical fears, right? So despite the tariff day announcement thing, like we, went to the upside pretty hard in early April there. So I think this is a good candidate for that. I certainly don't see significant downside, especially because that's one thing else, right? I wanted to point out somewhere along the line here. Let me make this bigger again for you guys. Somewhere along the line here, it's about maybe a week ago, right? So basically during the convertible bond issue, somebody went ahead and sold a huge number of short 22 puts, something like 13,000. I think it's like 13,000 $22 puts for next Friday. So not this Friday, but next Friday. Yeah, I'll show you guys this over on Unusual Whales here. I think we got up amount to 14 days. So this came in on the 13th in two different blocks. Excuse me, on the 12th, on the 13th. So one batch came in on the 12th for 5,704 short puts. And then a second batch for 9,223 came in on the 13th. So very little action on the strike besides. No one else was really trading this. And then one trader or two traders came in and decided, let's go ahead and open 14,000 puts, almost 15,000 short puts at that strike. So what that is going to do in our landscape, our options hedging landscape, is that does provide basically into next week very strong hedging support relative to our total overall options market and hedging forces at $22. So I don't really see us going below that. At any point this week. I mean, maybe we do go down there. Maybe somebody gives us a little push. There is plenty of lending liquidity. We actually got up over 6 million shares on Friday, which is the highest ever available in GameStop, despite the fact that we just have all of these rolling fails across all these ETFs, millions at a clip. Somehow there are the greatest number of shares in GameStop history available to borrow. So, who would have thunk? I wouldn't see much movement below $22 there. Like I said, maybe we do get pushed down there, so we could do something of a bigger run midweek. But yeah, more or less, I think highest confidence interval trading in this 22 to 25 range. If there are some of these external factors that come into play this week, could see us move above 25, play around maybe a bit in the 25 to 27 range. That's basically my outlook there. Always a good week for GameStop, always a good week for GME. Very much looking forward to seeing how this all develops and then, of course, breaking this down each day as we go along and then into our live stream on Friday. So thanks very much, as always, for watching and listening. Very much looking forward to seeing you guys, seeing your questions, comments, anything of the sort. And we'll see you next time. Thanks very much.